Hello and welcome to Business Television India. I am Piyush Jain, and joining us on the show today is Sandeep, Raina, the Associate Director at Edelweiss Investment Research. Sandeep, welcome to the show. First question to you, what at present you are telling your clients on the market right now? Because one sort of opinion perhaps would be that earnings season perhaps is almost towards the fag end of the earnings season where actually we are right now. It has not disappointed largely. Largely, again, the numbers actually have, on an average basis, again, they have been either meeting street estimates or slightly above street estimates here. So, is it a good time to stay invested, or perhaps you think the market's already fairly valued? There could be chances of better entry points here.
Okay, so just talking about the market, I think we have to divide market vis-a-vis the stocks. I think every time I come on the screen, I say that we have to divide these two because market is generally the broader trend. But there are a lot of pockets of stocks which are done exceedingly well despite market not doing well. Let's say we saw a fall from 11,000 to around 10,000, which is a big fall. But there were a lot of stock which actually in pockets did very well. So if I just talk about those, like there are few sectors which are doing well. Let's say chemical is doing very well. Your banking, private sectors is doing very well. Your BFSI, NBFCs are doing very well. So infra per se, roads are doing very well. So these are sectors I think we should be talking about and investing in. Now coming back to your question on markets, I think markets are looking fairly decent. Because I don't think so there is a lot of correction that we are expecting now, because I think we saw a very good correction of closer to 99.60. That was a bottom made in last 1.5 months, and after that it has just shown a very good rally. Broadly, I think 10,300, 10,500 is fairly the market can settle based on the EPS estimates. And also just talking about broadly about these numbers, I think in Nifty 50, I think out of 50 companies, only 18 companies are given the results, because your major portion, that is your infra and all, has still pending. The companies which have come out with results are broadly BFSI and few pockets of auto. These are the two ones. Infra, the entire packet, the metal, most of the packets are still left. In metals only Vedanta has come out with the numbers. So, and also if I talk about these numbers, I think fairly broadly 8 to 9% growth we have seen. Overall, we are expecting 15%, but the major chunk is supposed to come from metals. So I think still a lot way to go. I think more or less we'll be matching the EPS estimate what is there for the year.
Right. So at present, that implies that we are on track again. So there is no major disappointment which is coming here. So Sandeep, you're just highlighting it's good to be sector specific, good to be stock specific. So tell us what you're liking right now in terms of stock ideas, in terms of how it's looking on a top down or bottom down basis here.
Okay, so I think if I look at the top down, which I just said right now 2 minutes back, I think we should look at metals, we should look at infra, and infra specifically we should look at again the road portfolios, we should look at chemicals, we should look at NBFCs. I think NBFC have come back very strongly, and if you see the results of NBFC and private banks, I think they all are very good, and these are sectors we should look at. Now coming specific to companies, I think in infra, I think we should look at Sadbhav Engineering. Now, just to give a background about this company actually lost 2 years kind of in terms of not bidding many projects and all that, and now of late they have started bidding a lot of projects. We know that it is one of the best execution company we have in India on the road side. I think this company will do well, and also the valuations are attractive for this company, and I think we can make straight away 25% at least in this year if you invest in this company on the infra side.
Right, and Sandeep, why again basically Sadbhav Infra, why not Dilip Buildcon, or again there are a lot of companies simply like PNC Infra or PSP projects. I know again on a stock specific basis the drivers actually they differ company to company here, but is it specific something for Sadbhav where you think perhaps broadly where the order actually inflow is looking quite robust for most of the top 6 or top 7 companies here? Was it something really specific where you think perhaps disproportionate earnings growth could be happening here?
Okay. Now, since you have talked about Dilip Buildcon, of course, Dilip Buildcon has been our topic. I think in last 1 year we have made a lot of money in that. In fact, we initiated at close to 350 odd levels. Now, talking about this entire, okay, since you are talking about the sector, let me talk about the entire sector. So there are 3-4 companies which we like the most. Now, it will be very difficult to rank it like who is number 1 and number 2 and where you can make most money, because maybe somewhere you will make 25%, somewhere you will make 28%. More or less, it will be in a range. Now, Dilip Buildcon has already seen a good run in last 1 year. The stock has already kind of tripled out from the bottom more 5 times. And of course, given the fact that Dilip Buildcon has 30,000 crores of order book, gives us a lot of comfort that next 2-3 years are good for him, and he's one of the best execution guy. So I will prefer Dilip Buildcon also, and I'll prefer Sadbhav also. And so these are my top picks if you ask me in the sector. Then coming to PNC and all, I think PNC is a good company, but I think they have to work on the execution a bit, because they again lost it in last 1.5 years. The execution was a bit of a problem. I think I'll watch it for a quarter to understand how the execution is panning out, and then I'll get into PNC again. But for me, more or less, Dilip Buildcon and Sadbhav will be my top priority, and then coming to PNC and others.
Sandeep, a follow-up on the Sadbhav Infra here. What's the geographical exposure area for Sadbhav Infra? Like, which are the particular geographies where you think actually most of the order executions or orders right now perhaps are going to get executed at present?
Sadbhav, we know, is a Western company, so most of their projects are in West, but now they are also getting out of the Western market, like in part of South and part of mid-India likewise. But the biggest portion is their West, and that's how they'll happen. So these 2 portions that they are adding. Unlike Dilip Buildcon, which has a major portion, of course, in Middle India, that is Central India, and of course they have moved to South also. So that's how the geographical areas are for these 2 companies.
Right, and anything in particular where actually, if you're talking about Sadbhav Infra, but anything which you think perhaps companies which are having exposure to South, like Andhra region or perhaps Telangana region or UP region, is it prudent? And I'm trying to ask from the investor's point of view is it prudent to actually target companies in the regions where actually regions are showing phenomenal order giving away activity here, and because of that, if you're able to pick out companies which have good, transparent, good execution, perhaps those could be outperforming here. Is that a prudent actually way to look at infra companies here?
Frankly, that is the only way to look at infra companies. You are just hitting the right thing, because company with execution, we have to buy them. See, government of India is very, very, in sense they are giving a lot of orders. The NHI is giving a lot of orders. Just to give a number, I think this year we are closing more than, I think, 7,900 kilometers and all. And I think this is the best that we have done for the year. And I think in next 3 months, again, 3,000 kilometers more will be further given to all these companies. So on the order book side, that's not a problem at all. So we just have to find out company where the execution is the best. So since you're talking about South, in down South, I have a company called KNR, which again is very good on the execution, at par with these 2, Dilip Buildcon and your Sadbhav. So that is the one company we can look at. And as rightly said by you, that yes, we have to look for companies with only execution. There is nothing else that we want in this sector at all, because orders are given to us by the government, that is NHI. So there is no problem in that. The big companies will always get the bigger orders, so that is also given. So that is not a problem. Only things a company which can get orders and it can execute. And so these 2-3 companies looks like they can execute well, because the history has given us that comfort. The probability that we can assign to these companies is on the higher side. So these companies will do well, and we should be investing only in companies with execution. There is no rocket science to invest in this sector. It's a very, very simple way of basically investing.
Right. So if region execution are the 2 most important things, again, the way actually you should be looking at infra companies. Sandeep, one more point here. Is there any company which you think perhaps is looking quite strong to execute orders in Uttar Pradesh region? Because you highlighted KNR again. That's one company again, KNR Constructions. If you want to look at South, Sadbhav Infra, again, another company has strong presence in West. Dilip Buildcon you already like. Any other company which perhaps has a good presence or a good potential to execute orders in UP, because that's the place again which has come up in the last 12 months where a lot of orders actually are coming by.
So Dilip Buildcon is one which is having MP and part of UP. I think PNC also has some areas of MP and part of UP. So these are two companies. And rest I would not know who is majorly into UP, but these two three companies I'm sure they are part of this Middle India, which they will work in UP, because UP, yes, as you rightly said, is a big area of growth. So that's why if you ask me, now coming to UP specific, I think a lot of cement companies should be looked at just because of UP thing, because there's a company called Birla Corp which I have also spoken before, because that's the area which is again concentrating on Middle India, and that's how the growth will come. So yes, as rightly said, people should invest in companies which are investing in more so on the road side or in the infrastructure side on the UP side. So these are the two companies which I said they are closely working in the UP.
Right, and a follow-up on that. In terms of the stock price targets, if you have any for the companies which you talked about, and also perhaps this year or the next year again, what sort of optimum targets you're looking at?
See, broadly, if I just talk about these companies, as I said earlier also, 25 to 30% is the number that we can look at for the year from most of these companies in terms of stock price.
Well, anything about 20% definitely again is going to actually please the investors. That definitely actually gives a good sort of stock price performance here. So that's the take on infra sector here. But then Sandeep, I also want to ask you regarding the steel sector, the metal sector here. Appears again, if I look at the price trends, that tells me, let's first talk about steel price trends. The Indian spreads again have improved again. We're talking about a moderation of the European spreads, but broadly Indian prices have improved. The raw material price trends again, those actually have become favorable because there's a decline in raw material prices here. So, and steel companies, again, now the stocks have been moving sideways. So, how's the outlook looking to you? Where are we right now in terms of opportunity, valuations? Is it a time to invest, or one should actually avoid the sector here?
Okay. So two, three questions you asked me about the sector. I think it's not only steel sector, the entire commodity sector is looking interesting. So be it copper, be it aluminum, across all sectors is doing well. Now, since you asked me that, European spreads are not increasing, or let's say kind of stagnant, and your Asian spreads are improving. See, why Asian spreads are improving is very simple, because China has curtailed their production. So China used to dump a lot of steel in and around because of their higher production capacity. So now China has closed around 200 million tons of capacity, which is double the size of India. Because of that, now China has stopped, kind of dumping the steel, and which has led to increase in spreads for the Asian prices. I think this will continue for some time. Asian spreads will be better off than European spreads, and Asian companies will do very well. So all your Indian companies also will do very well on the steel side. Just to give a perspective, that this year I think we have grown at 8% in volume terms, and production was up 6-7%, something like that. So that's why you see the volume growth has come for all the companies in few quarters, and I think this will continue for some time, because given the thrust on infrastructure in India and the kind of growth we are looking at in India, so steel companies and most of the infra companies, most of the metal company will do well, thanks to volume, thanks to your prices, and EBITDA will actually move up significantly.
So Sandeep, in that case, where actually is the real disproportionate value again which can be made here? Is it JSW Steel, pure Indian exposure, or Tata Steel again, maybe on the valuations if you compare to the global companies could be looking slightly lower, but then why is trading lower? But then also JSPL recovery has been happening, but I think the run-up has been too fast here. So where actually is the real value looking to you? I'm just asking you on steel. Next one perhaps I would be asking you on metals here, but broadly steel, where is the value here?
So yes, JSW Steel, which is an India specific company, I think it is looking interesting, and one should again do in stocks. JSPL again is looking interesting, but again for JSPL the stock has run up, and second also we have to understand they have 3,000 megawatt of power plant, which actually is not in a great shape, because their PPP is still not fixed. Only 1,000 megawatts PPP is there, and for 2,000 they are still into looking for merchant powers and all that, which is still not in a very, very good shape. Then yes, Tata Steel is looking interesting, although it's a global company, but most of the valuation comes from Indian company, because there is where you make a lot of EBITDA, and the valuation is driven mostly by Indian business. So that is also again an interesting company. So these are all talk about the large caps. I think In metals, let's say not specific steel because there are no small steel company but like stainless steel company. So Jindal Steel Hisar, which is a small company which does around 10,000 crores of revenue, is looking interesting to us. What we talk about in metal space, or let's say stainless steel space.
Sandeep, I think the last one is very interesting because I think from a long time that company was being written off by the market here. It appears that again the fundamentals prices actually are turning around here. Give us some more insights into why you like that stock, what is happening into the pricing trends for the market here. Are you really looking at the profitability to improve substantially from the current levels here? And in particular, if you have a target or if you have a sort of outlook how this stock could be performing over the next 12 months, please share that with us.
Yeah, so just talk about this company. This company into stainless steel. He is the largest player in India in stainless steel. Jindal Steel. So they, if you remember, there were two companies, Jindal Stainless Steel. So they divided the company into Jindal Stainless Steel Hisar and Jindal Stainless Steel. Now we like this company the most because the EBITDA per ton this company is making on the much higher side. Also the growth they are talking about is 8 to 10% volume growth. Although in this quarter we saw also we saw volume growth of closer to 8%. Although value growth was only 1 or 2%. That's why the revenue increased by 9%. But having said that, I think going forward, your realization will also move up significantly from here on because the demand is very strong, both from the industrial segment and also from the cookware segment. So that's it is. And also we have to understand this company is now targeting hardcore industrial segment, which is high value and more difficult product to make. Nobody else in India actually makes those kind of product what this company is making on. So and also this company, the price actually corrected well. It had gone to some 220 odd levels, corrected to 150, 155 levels. Today standing at 170, 180 looks very interesting with a target of 320. That's how it is.
Right, so appears again basically if the value growth is also going to improve, the realizations are going to improve, then in addition to volume growth, the revenue is going to improve in double digits, and that basically, and as Sandeep was saying, if they are moving into higher value products, it implies margin improvement, disproportionate earnings growth, and that's why I think it's looking like an interesting stock as Sandeep was highlighting here. Sandeep, apart from the metals and also the ferrous and non-ferrous space we have talked about, anything else which you're liking right now?
In metal space, you're saying?
Apart from the metal sector, any other stock again which you're liking right now?
Yeah. So BFSI and chemicals both are looking very interesting. Now, if I just talk about why chemical, again we should thank China because they are kind of closing a lot of their capacities just because of their pollution problem. And I think India is the biggest beneficiary of taking those capacities, because if I just talk about the size difference, China would be 6 or 7 times the size of Indian chemical industry, even more. As if I just talk about product specific. Now in chemicals, carbon black is very interesting product for us because I think carbon black companies will do very well. So we have Philip Carbons, which will do very well. Just to give a perspective, I think prices of carbon black has moved by 40 odd percent in last 2 months. Now company like Philip Carbon will get the benefit, of course not to the extent of 40 odd percent because they are into contracts, but at least 20-25% of realization growth can be expected in next 1 or 2 quarters because they will take some time to pass on the price. Your raw material is not moving up very significantly because again they are contracts. So and as such they are pass throughs. So it's a crude based derivative. So crude has moved to 70 odd level. All that price will be passed on, and of course a significant portion would have already been passed on. So that is a company we should be looking at in chemical space. Another company which is looking very interesting to us is Deepak Nitrate. Now Deepak Nitrate is getting into a product which is 100% import based, or 95-97% to be precise. Now that all product will be actually taken by the industry from Deepak Nitrate. So there can be a huge upside that we'll see in next year. So I think profit is more than doubling or even more in next 2 years. So that is these are kind of company you should look at. Again, product specific, company specific, and which should do very well despite market, wherever the market will be moving.
Well, Sandeep, I have to ask you, your answer actually has made me curious to know and to tell our viewers more about Deepak Nitrite here. Give us a sense again what sort of volume growth you are actually seeing here, and also Is it about a secular demand trend which is improving, which you're seeing, and perhaps that's could be actually going well beyond 1 year, 2 years here? And are you also seeing the capacity utilization and new incremental capacities being set up here? Like, how's it looking for Deepak Nitrite in particular?
Okay. See, Deepak Nitrite is a simple question of demand changing. So basically changing of hands. So you used to, let's say, import 100 rupees of product. That 100 rupees of product now will be produced by Deepak Nitrite. So he has put a 1,000 crores project of acetone and phenol. Now this all products were 97% imported. Now that all products will be now taken by from Deepak Nitrite. So that is the kind of, that is why we'll see a huge growth in next 1.5 years. And after that, I think after this equilibrium will come into place, and after that we'll see a growth of 8 to 10% regularly, because by that time his entire production capacity will be utilized, and so that's why we'll see a huge growth on the PAT side for this company.
And Sandeep, also one word again, who are the main consumers for the products of this company?
So basically all paint companies and majorly paint or any chemical industrial uses are there for this acetone phenol.
Right, which means sort of strong demand trends again, because again, if the consumers are belonging to that industry, it makes again incremental demands here. But Sandeep, just a follow up here, if Deepak Nitrite again is actually seeing that trend, do you have any view on the Vinthi Organics also? And also again, is that trend, perhaps there are more products, but do you also actually like that stock here?
We do like Vinthi Organics. In fact, it is under our coverage. Just that the stock is very, very expensive, and given the fact that, so for Vinthi Organics, a very simple company, they just grow by 18%. If you see the CAGR for last so many years, so that is how their trend is. They are very, very focused company where they make small product for companies, and then deliver based on their process improvement. So that is their basically your business model. So they just work on their processes, improve the process, improve the efficiency, and then sell those products. Now that company is a very, very niche company, so that is not a mass company which can do 40, 50, 60, 70% growth kind of stuff. So they will be a 15-18% CAGR company which will deliver over a period. Now the problem is, let's say you want to make 50-60% in that company is difficult. So it's a very long-term steady state company, and investors who wants to make 15-18% for next 5 years, I think those are the guys who can get into the stock.
Right, so that's the take coming here. Chemical indeed a very interesting space here. One last question would be again, is that what's your take on the IT sector right now? And I'm asking in particular in a very focused way, looking at the Cognizant sort of commentary guidance here. We have been seeing some good sort of buying which has been happening over the last many weeks in mid-cap IT stocks here. Mid-cap IT is about different niche sort of themes here, but broadly again, what do you make out of the Cognizant commentary? Is there anything perhaps which we could be really looking at as a value buy or as a good opportunity in the IT space here? Okay. Now, first thing is, I think the value buy as a concept in IT, I think is gone. It was, I think, 1.5 years ago that we could have seen as a value buy, that too more so in the mid-cap IT. In large-cap IT, I think there is nothing interesting. Maybe TCS is one which is looking at least okay. And just to talk about the question you asked about the commentary from the Cognizant, yes, they grew at 2.2% this quarter, but that was more or less in line with what they had said and what was the expectation. Now, I'll tell you what is happening in IT. See, in IT, the digitalization, what we are talking about, the companies into digital component of their revenue, with the where the maximum revenue are coming from digitalization. I think these are companies to look for. Now, in let's say in domestic, smaller IT company or mid-cap IT company, the thesis was, these are smaller company. If they get a small pie also, it will be very big for them, and that's why they do very well. But I think more or less it is not happening. Last 3 years it has not happened. I think more or less what has happened in IT industry, the market has just catching up the valuations. So they were available at 10 times, now they are 20-22 times, which is very, very expensive given the market of IT mid-cap. So I will not be investing. Only one company which looks interesting in mid-cap IT would be Mindtree, at least because 45% of their revenue are derived from these digitalized products.
which I think can grow further, because that is a component in IT industry which is doing very well. So in IT, I think I'll just look at Mindtree, and rest I will not get into any mid-cap IT companies.
Right, and indeed, again, mid-cap IT is definitely a specialization, and again, one should be really sure about the valuations here. But Sandeep, also, last question to you would be, looking at all the developments again, where we are right now in terms of sectors, earnings, valuations. We have talked about number of stock-specific picks here, but are you actually, this would be a question simply on FY19. Are you sensing any chances of pullback in the markets right now? Like, can the investors get much better entry points, or you think perhaps 2-3% here and there, and we actually are going to consolidate, and eventually, basically, stock-specific approach is going to outperform here?
Trust me, it's very difficult to time any stock or in market, because I don't know market will settle at 12,300 or 500, or it will just move up. I have no idea, because but what I can do is maybe if I buy and be in market, maybe I'll buy 25% today, and then maybe wait for 15 days, and maybe I'll buy further up only, or maybe further down. So maybe I can just have a scattered kind of buying of this thing. But more or less, I will not be. It will be very difficult for me to actually time it and buy the stock in one go with 3% correction or 5% correction.
Well, that's the take coming here. Stock-specific approach, they normally again are being discussed and analyzed on the basis of stock valuations. Their markets perhaps at present giving you signs of consolidation. Results are moving in line with expectations here. Sandeep, thanks a lot for providing us all the insights into your stock picks and what you think on the markets here. And with that, it's a wrap on this edition of Market Guru from the entire team here. Thank you so much for watching us.